I think that's because there are shortages on the COMEX and LBMA. We've seen that. And China's not letting gold get out. You saw Russia nationalize their third largest gold mine. And there's been scuttlebutt I put on Twitter that sources have told me that have been reliable on other previous Russia predictions that feel as though Russia is angling towards maybe a bigger nationalization of its gold market. And I think the BRICS countries are coalescing around gold as one of their key assets to support not only their currencies and potentially a joint currency that they're talking BRICS currency that they've been, mouthing off about for a while, but have to put infrastructure first. And so people are impatient. Why hasn't it come out yet? Well, it'll come. You got to build, a whole system around that. We're talking about 50 countries with different regulatory regimes. That will eventually come. So I think that's kind of where gold's going. But
Russia is building its gold exchange outside the reach of London's century-old bullion market. China's opening of offshore gold vaults allows trade partners to bypass the dollar entirely. Both countries are stockpiling at a pace not seen in decades. The question isn't if gold will play a bigger role in global finance, it's how soon. Russia is preparing to launch its gold exchange, independent of the London Bullion Market Association, which has dominated international price setting for over a century. Trading on the new platform will be based on physical bullion, with participation open to BRICS member states. Robert Kientz, author of Drop Shadow and founder of Gold Silver Pros, states that Russia has already nationalized a primary mine and may take further action. Both Russia and China, he notes, are actively hoarding gold. Trade Data Monitor, citing China's Customs Office, reports that combined imports of gold and silver into China surged 80% in the first half of 2025 compared to the same period in 2024, reaching $1 billion. Kientz believes gold will take on a central role in supporting currencies over the next 2 to 5 years, especially in the BRICS bloc. But a unified gold-backed currency isn't simple. It requires infrastructure and cooperation among dozens of countries. China has already taken a big step by opening its first offshore gold vault in Hong Kong. The facility enables trade partners with a surplus of yuan to convert it directly into gold via the Shanghai Gold Exchange, thereby bypassing the US dollar entirely. Chinese officials describe it as a bold move toward transparency in trade and a return to 19th century principles. Where there's gold, there's money. Kientz refers to this as part of a generational reset in global finance. As the dollar declines, he warns, expect trade disruptions, market volatility, and opportunities for those who are ready. Governments won't save you, preparation will. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
For gold, there's about a 18-month period of time between February of last year and about this middle of this summer where gold just ran. I think I mentioned last time on the program that the summer tends to be a little bit weaker for the metals markets and even sometimes the financial markets, but especially metals markets because they don't get the money pumping by the Fed like the stock market does.
Right.
So what you'll typically see consolidation patterns, usually sometime in August. We talked about this last time. Thank you for the chart. August, a lot of times you'll have breakouts, not every year, but sometimes, and I'm just talking about a short-term breakout, not it's going to 50,000,
right,
all that kind of thing. And so, but we've had the gold breakout and it needed to rest, and it was predictable that during the summer it was going to rest. People rest their positions, they reposition. And we haven't had that global meltdown sort of catalyst to kind of break it. What we do have coming forward is going to be the love trade with India and China and them using gold in their ceremonial. The other thing I'd like to point out is that China is now going to Africa, going to the artisanal mines. And there are legitimate artisanal mines, and then there are the slave labor. And I'm not going to separate the two here because there are legitimate artisanal mines all over the world, including South America. And in fact, this is the way it used to be done in the US with Wild Wild West, right? And in Canada. Not everything can be done by a big company because the deposit may not be there or the country may not have the infrastructure. So the gold market in Central and South America does have big companies, but it also has a lot of independent, and some of that's legitimate. Anyway, the Chinese are kind of coming after that. The US is too, and so is the UK. There are forces in the UK that had contacted me a couple of years ago that were interested in maybe setting up an ETF, and could I help them connect them to the artisanal mines, and I don't really have those connections in that part of the world, so I told them I couldn't. And honestly, I didn't want to put it into an ETF. I want the gold to come out physically for people. So I didn't participate in that. But everybody's going after these artisanal mines. And I think that's because, why does this matter? I think that's because there are shortages on the COMEX and LBMA. We've seen that. and China's not letting gold get out. You saw Russia nationalize their third largest gold mine. And there's been scuttlebutt I put on Twitter that sources have told me that have been reliable on other previous Russia predictions that feel as though Russia is angling towards maybe a bigger nationalization of its gold market. And I think the BRICS countries are coalescing around gold as one of their key assets to support not only their currencies and potentially a joint currency that they're talking BRICS currency that they've been mouthing off about for a while, but have to put infrastructure first. And so people are impatient. Why hasn't it come out yet? Well, it'll come. You got to build a whole system around that. I mean, we're talking about 50 countries with different regulatory regimes. That will eventually. So I think that's kind of where gold's going. But right now, that's kind of the 2 to 5 year picture. And right now, gold's just kind of sitting there consolidating, waiting for a catalyst. And I warned people a few months ago this would happen. But I expect in the fall it'll have its normal upward movement. Now, if we get a huge breakout in August, September, gloves are off, and maybe we have a run, and we'll have to look at what the catalysts are. I don't necessarily expect that, but we'll see what happens with like geopolitical things and stuff like bank failure, stuff like that. I looked at 6 major measures of the economy, like M2 and inflation and all that kind of. But when you looked at the currency chart, China had printed more up to that point than the U.S. had, even with all the printing we did through the Great Recession. China's been printing currency like mad. They're having their own issues, and they're trying to stabilize it by, that's why China, Russia, and them are hoarding gold. They know the crash is coming, and they're doing the right thing in telling their citizens to hoard gold. They're hoarding gold because they know the resets. So they're preparing, but they need more time to prepare to stabilize. And for the Chinese people and the Russian people, of course, I don't want them to suffer. We definitely want them time to prepare. But China's printed excessively. China's trying to switch over from an exporting country to building up their own middle class to where they can self-support. So they're on the U.S. path, but they're early on. And so they're going to have a lot of growing pains along the way as they go there. It's not a smooth path. The U.S. wasn't a smooth path either. We had our issues before, we had our strong currency era. But as the U.S. rotates out of being the dominant currency and it rotates into being probably China, we think would be the next one. That takes time to happen. China's not ready yet. And so they've got to clean out a bunch of crap from their system and revalue. So when the currency revaluation comes, it's going to come across the world. And it's going to clean out a lot of the debt issues, a lot of the trade issues. And you're going to see a rebalancing of global trade, a rebalancing of currency valuations. You're going to see gold become very prominent in supporting this worldwide currency system. And that's kind of where we are. It's kind of this generational change in just the way that trade and currency systems work. And we've all, as a world, the world participated in the dollar, and the world is going to suffer when the dollar collapses. And it's not just going to be a currency failure. We're going to have failures in trade, markets, things like that. It's not going to be isolated to the United States. And typically, other countries' currencies crash before the dominant currency. So the U.S. may be the last horse in the glue factory, but it ain't going to last either. And so you're seeing issues in Turkey. And by the way, Turkey's implementing capital controls as a result. You've seen issues in Argentina, but Malaya's been down there trying to stabilize. You're seeing issues in Russia and China, and they're trying to stabilize. So the governments of the world are trying to get a grip on it. But it's all that dollar inflation that's affecting the rest of the world and causing problems there. And that, by the way, is one of the major reasons why the world is now aligning outside the U.S. and the dollar. Okay, so that's really kind of the 10,000 foot view of historically how these things have gone, kind of bringing it current to what we're seeing now. And so that kind of explains what's going on. Yeah, China will have a crash. But with all the gold that they have and with all the ports are opening around the world, the Brick and Road Initiative, I think that they're going to recover much quicker than the United States. The United States crash, the big one will probably come after. And the United States is going to have to figure out what its strategy is going to be because we don't have the manufacturing base. We don't necessarily have all the things that some of these other countries have been working on. There's questions about how much gold we have in Fort Knox and underneath the New York Fed and all that kind of stuff. So Trump's trying to do some things around the sovereign wealth fund. By the way, other countries have had sovereign wealth funds for a long time, but that's going to be a drop in the bucket. It's not going to handle the $37 trillion in debt. So that's why when you look at China and Argentina and Turkey and all these countries are having issues, Greece is a good one, Spain, all that kind of stuff. Brazil, Venezuela, right? That is what is going to happen to these. So when you watch that tells you what's coming, and it gives you a bit of time to prepare. And I'm telling you right now, the government's not going to save you. They can't. It's impossible. The numbers, the government can't. The numbers, it won't allow it. So what you got to do is understand what's going on and prepare yourself. Don't wait for the government to come save you. And ultimately we'll get there. There'll be a rebound, a rebuild, and there'll be tremendous opportunity for people when that happens. But we're not in that stage. We're not in that stage in the world.
2 million ounces of gold have already been physically delivered through COMEX this year, more than in any year over the past decade and a half. And here's the kicker. It's not retail investors driving it. It's the big players, industrial and institutional buyers. And history says that's the signal to watch. Robert Kientz says COMEX deliveries in 2025 have already topped 2 million ounces, surpassing every year in the last 15 years. This isn't your typical futures market activity. Since early 2023, the precious metals market has experienced a sharp increase in physical gold deliveries from COMEX, a notable shift in behavior that could alter how investors assess gold prices and position themselves. The demand is coming from industrial and institutional buyers, not the public. At the same time, gold vaults at the Shanghai Gold Exchange just hit a record 35.74 tons. That's an 18% jump in a single week and a staggering 136% increase since the start of the year. Kientz points out that this kind of heavy industrial accumulation has historically been a leading indicator. Retail buying usually follows 6 to 18 months later. Currently, the major players are moving first, and the public has not yet caught up. Let's get back to the interview.
Yeah, and the U.S. retail is very cyclical, more so than other nations in which have thousands of years of history of gold. We had it for a while, and then we went to the dollar. So really, most of our country has been dominated by like greenbacks or dollars or what have you. And gold was part of our system, but it's not a 5,000-year history of like you're going to get in Egypt or China or something like that. So that's why you see the BRICS nations going back to the long-term view on gold as the asset of last resort and also as the best buttress for your currency and trade system. The United States is much, much younger, doesn't have that sort of view. So a lot of the people, it's been a few generations since 1971 since anybody really had gold as backing of the dollar. And it was back to 1933 with the Confiscation Act where we actually circulated gold as a currency alongside any of these other transitory paper currencies. So you have to understand it's been about 100 years since gold's really been a part. So that's about 4 or 5 generations. People really haven't had it as a part of their everyday commercial ventures, gold or silver. And so the charts look like in the US, it's a very simple to understand when we have a recession. Gold goes up, silver goes up. No recession, it fades down. Recession oncoming, gold, silver goes up. And the prices will go up before retail will engage in buying the metals. And so the Eagles is a very good sort of microcosm of that. It's not the whole market, but it's a very good indication of diehard Americans that like American gold and silver Eagles as the #1 sovereign coin in the US. And when you see those start to creep up and stay creeping up, you know that retail's in it. But the commercials always get in first, hence the rising prices on the commercial markets. The delay until the retail markets catch up. And when you start to see real public signs of recession, bank failure, stuff like that, there'll be a period of time in which gold and silver will start to rise. And then you'll have the panic run. So we're just not quite there yet. I would say I kind of expected the currency to really start to hit the skids, but with the stablecoin stance by the government and trying to move the treasury trade over to stablecoins and get all the digital guys to go into it, I think they bought the dollar a little bit at a time. Which is a good thing, because if you have not prepared by having gold and silver portfolio, guess what? You get a little bit longer. That's a good thing. People are like, crash it now. And I'm like, do you understand what that's going to do to people? More time is always a good thing. It gives us an opportunity, one, to fix our trade issues, to put some solutions in the economy, and to get people into gold and silver to help protect them. If the whole thing crashed right now, you'd have a lot of American families suffering very, very badly. And that's not what we want. So I don't care that my prediction wasn't exactly on point. I like the fact that we have more time because it helps people. So I'll take that. I'll take a few years delay in that so that people can prepare. I will tell you that even though the U.S. government is doing like Bitcoin and gold in their sovereign wealth fund, I do not suspect that that's just going to be distributed via food lines and things like that during the next recession. I think they're going to use it to stabilize the system, which is a good thing. But that means that you, because of our debt levels, which, by the way, we are legally tied to, every person that is a citizen in America is by law tied to our debt. We owe it. And so we don't want it to crash right now. We want to get people more stable with some gold and silver in their portfolio, so that when that crashes, they have alternatives and options. And I think that's extremely important. Everybody looks at the totals line there at the bottom. The thing I'd like to point out, as you mentioned, this month so far, 21 was at 785 of 100 ounce gold, so 2 million ounces of gold physically delivered on the COMEX. And if you look at the numbers across the year, it's the biggest year I've seen since I've been doing this in 15 years. I've never seen anything like this. Like I said, the industrials want the gold. The retail hasn't caught up. This is an industrial market. This is where the big guys come to play.
The early warning signs are there, Rob. I mean,
that's the canary in the coal mine right there. What you're seeing is predicting what's going to happen to retail gold. It's some 6 to 18 month lag, usually somewhere in that range. If you look at long-term bull market patterns, from a time perspective, we probably pass through most of the time, but it's that last wave where you get the biggest bam.
Yeah.
And so I think especially if you look at Elliott wave analysis, we're not quite to the last fifth wave. I'm not an Elliott wave expert. I follow other people that are. Abby Gilbert is a really good one. You can follow him on Seeking Alpha. Elliott waves don't 100% work all the time, but when they work, meaning when you have a true long-term pattern that you can graph out into the Elliott wave, basically that shows you the last wave is kind of the big one, and it takes some time to get there. And you can see us moving to that point, but we haven't had the super big breakout. Now people are going to say, well, Rob, gold's 3,400. How can I afford an ounce? Well, you've got fractional gold. You got things like gold backs, which are like 1/1000th of an ounce you can get for $8-10. My company, Kientz, has their version of that as well. Not trying to plug it, just giving you options. There are ways to get fractional gold, so you can have a little. You can even get gram bars from Valcambi, from a host of providers. If anybody's interested, contact me privately and I'll get you hooked up. I don't want the money. I'll just educate you on your options. Also, gold is often said to be the money of kings, silver of gentlemen. So if you can't afford gold, you can always do silver as an alternative. Silver always follows gold, so it actually gives you more time. But then when silver pops, it goes real fast. So if you're going to do silver, it's now, don't wait, if you can't afford gold. But I would always recommend, and I'm not a financial advisor, always my disclaimer, check with your financial advisor, do your own research. But if you've decided to get into gold and silver, what I do is put that way. I do a lot of fractional gold. I don't do 1 ounces because it's going to be so expensive. You're not going to be able to trade it for bread. You're going to be buying city blocks, right? That's the history of when we revalue economic systems on gold. It becomes extremely powerful. So you don't need a lot. So buying fractional gram bars, gold backs, other ORMs from many of these other companies is really good. By the way, Valarm, who does the arms for gold back and for Kientz and all these companies, is doing this for countries around the world that are adopting it as legal tender. There's a series, if you go to valarm.com, of legal tender bills for other countries. So this is available around the world and affordable to people, and some countries are using it as a second currency. By the way, many countries in the world have a second currency. In Panama, they have the Balboa, which they print a little bit, but it's not inflationary because there's no central bank to just print enough to circulate, but really they rely on the dollar and competing currencies. And then we're talking about moving, gold in there as well, and the banks are open to that. So, a lot of people have more than one currency. In any case, so lots of different options for you. People can email me. I will tell you what I do. I'm not a financial advisor. I will not financial advise you. I don't want money. But what I'll do is I'll tell you what I do, and then I'll give you a bunch of stuff where you can go research yourself, and I'll tell you to go do your research, and what you need to do. Don't trust anything anyone ever says on social media without checking it first. But I think it's pretty clear trends in history where this is going. And yes, you do still have time. And yes, there are options no matter your budget. And those are things that we can help people with.
Physical flows, vault expansions, and the creation of parallel trading hubs are reshaping the metal's role in the global system. The steady hand of institutional accumulation, paired with the deliberate construction of markets beyond Western oversight, points to a future where bullion is more than a hedge. It's a strategic pillar. This is less about day-to-day price moves and more about re-engineering the plumbing of international finance. If these parallel systems continue to grow and consolidate, could gold transition from a reserve asset to the backbone of a new trading architecture? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.